Bismillahirrahmanirrahim. Dear viewers, Assalamu alaikum. I am your host Faisal and you are watching Foresight. Viewers, foreign direct investment is a significant capital income for any country and an imperative portal to the development of advanced technologies, effective industrial growth and marketing networks. It is no doubt that a persistent inflow of the direct investments open the gateways to the elevated production capacity, which ultimately creates job opportunities, and as a result, it reduces poverty. Unfortunately, in Pakistan, investments are accounted lowest. At least it's 13.6% to the Pakistan's GDP as compared to the regional average of 34%. These are the figures from June 2023 last year. It might be because of that reason that Special Investment Facilitation Council was formed in July 2023. Now, how much policies related to the investments are now going on? Why SIFC is necessary? How it helped to pave the way for foreign direct investments particularly and local domestic investments in general. What investment means and why it is direly needed for Pakistan's economy to grow further. To talk on this important subject, we have in our studios Dr. Hssan Daud Butt. He is the ex-Chief Executive Officer of the Khyber Pakhtunkhwa Board of Investment. Most welcome to you, Doctor. Thank you. And we have online joining us Dr. Usman Chohan. He is the senior economist and has a very close eye on the economic activities, particularly the investments from the foreign arena. So, most welcome to you, Dr. Usman. My first question to you, Dr. Hssan, that in July 2023, as we have just talked about, that government introduces not only the SIFC but also extremely flexible Pakistan investment policy. So, how much it was helpful in attracting foreign and domestic investments in Pakistan?
I think, thank you very much. It's a very pertinent topic, especially in a time when the new government is establishing measures and mechanism for attracting more investment, and for a country like Pakistan where the economy is fragile, you need out-of-box solutions for attracting investment. So, I think in the same account we had two regulatory framework erected recently. One was the Act, the Investment in Attraction and Promotion Act in July 2022, I think December 2022, and then following to that we have the investment policy. So, I think both were very progressive in nature. One addresses certain protections for investment, especially in mining sector, the earlier one.
You are talking about Foreign Investment Protection and Promotion Act might be. It was came enacted in 2022.
That's true. That it was in December 2022, and it was actually meant for supporting the mining sector and some of the concerns of the investors in mining sector principally, but it also catered for other protections and gave certain exemptions to the investors. But in following to that, I think the policy which came in 2023 was more pragmatic, more open in terms of attracting investment, and in that the sectors which are permissible for investment were meaning thereby that the negative list was reduced and perhaps strengthening SIFC to attract more investment. And when we talk about SIFC and when we talk about Board of Investments at the federal level and provincial level, I think they need this policy framework to support the actions that they have to do. Because when you go to investors, when you tell them that these are our natural endowments, these are some of the incentives that we have, the investors always ask for protections, the incentives and also the regulatory framework. And in country like Pakistan, their first question is always that how long will this policy continue?
Definitely, so continuation of the policy is the real issue.
Absolutely.
Really.
So, I think when we have this act and policy, the good thing within this is that it provides it certain and gives it strength in terms of that continuity. It gives them leverage in terms of attracting and working on sectors and then of course these policy exemptions and tax holidays that
So
are
do you think that because of these this existing policy or policies is actually easing the matter of doing business, then we have simplified regulations like
I think Pakistan,
then the guidelines and addressing the investment grievances and some sort of dispute resolution and all that?
I think Pakistan in itself is over-regulated. We have at the provincial level and also at the federal level, we are there are certain repetitions.
And sometimes you have overlapping of different
not just overlapping, I think there are certain redundant regulations which are already there, even regulations which were pre-partition that are being enforced, especially on industries which are here.
Definitely.
So I think when you do not have that clarity, and when you are overburdened, and when you actually through your regulatory mechanism pressurize the industrialists and investor, I think they shy away from that country. So by having these policies like the one that you spoke about, the act, and also the policy recently, I think the confidence of the investors have grown, and we are seeing certain MOUs and certain contracts that are being signed, and thankfully SIFC is taking the right direction, perhaps promoting agriculture sector, especially in terms of food security.
We have seen in salt as well, and salt mining as well.
I think when we talk of agriculture and when we talk of mining specifically, why do we need an investment body like this? Because these are in areas where sometimes we have security concerns.
Obviously.
So when you have the whole of government approach, when everyone is supporting this investment, from bureaucracy to military establishment and also the political governance structure, I think this gives a very good headline to the investor to come and explore Pakistan.
Obviously.
The other issue that Pakistan, and we may talk about this later, is that when the investor comes and invests in Pakistan, how to retain that investor, how to actually ensure that he becomes an investor for attracting more investment. I think that still remains a matter.
Obviously, your point well taken. Dr. Usman, when we are talking about Special Investment Facilitation Council, how much it helped actually to create business and investment friendly climate, along with that offering incentives, ending all bottlenecks and particularly the bureaucratic hurdles?
Thank you very much. It's always a pleasure to be on your show. Sir, you've asked a very pertinent question again, and that is, has SIFC helped with the red tapism, the stuff? The best way to assess that is to look at how the ease of doing business rankings hold up for countries. And in recent times, Pakistan's ease of business ranking is roughly flat, which is to say that it has not reflected the changes being made, if they're being made, are not reflected in the ease of business ranking, which is an international ranking that takes local data. So that's the first consideration. The second is that, is SIFC a replacement for your typical ministries? If it isn't, then the bottlenecks still exist, because the way the bureaucracy is structured, it presents a lot of bottlenecks for any serious international investor, plus the point about policy continuity that was mentioned just now, which is true. So if those things still exist and the NOC culture still exists, that means that it would still be considerably difficult for a slightly large investor to come. So I'm not speaking of government to government, but anything slightly large private sector, which has an enormous ocean of capital, for them to come, the SIFC alone would not solve it, at least if the current system is still also intact at the same time. So that's what I would present to you as a consideration.
So when we are talking about SIFC, to what extent would be handy in scaling up the foreign direct investment into the country, especially from the Gulf region, and how it is related to the domestic investments as well?
Insofar as you do government to government, it is possible for the Gulf monarchies, for example, to sign off on deals and to shift capital, because those decisions are made at the monarchy level. That's fine. But insofar as you have private sector, whether it is overseas Pakistanis, whether it is domestic Pakistanis, whether it is private sector multinational corporations, they would still not have the same facilitation that they would expect as they would receive in other emerging markets of roughly the same size, such as Vietnam, Colombia, Bangladesh, etc. So we should always keep in mind our peer competitors, and our peer competitors are working very hard. So Bangladesh and Colombia and Vietnam and other such countries are working very hard. So it is a very competitive market out there for capital. And capital itself has receded considerably since 2022, since interest rates were increased. That means that there is less capital floating around. You have to therefore be even more competitive than usual in attracting capital. It just doesn't mean higher returns. It also means a secure environment. It also means the consistency of policy. It means all of the factors that are put into the ease of business doing ranking. So this is a very complex process, and that's why my fundamental request to you would be that we have hardcore, serious economists running this aspect of the economy. It would only make sense, would it not? Thank you.
Yeah, definitely. Yeah, definitely. You are absolutely right. Dr. Hssan, when, as you have listened to Dr. Usman as well, so how much investments are necessary in a country which is going through an economic crunch, and especially the productive sectors to revive economy?
You know, we've spoken about this time and again. We've spoken about the fragility of our economy, the boom and bust cycle of our economy, mostly dependent on imports, and how we are a consumer-led growth that we always speak about. I think for us to have industries and export-led industry is important. We have the natural endowment, as I spoke earlier. We have the mines and minerals and the ingredients which are required for that industry. We can add value to that and export. So I think what we need is good partners which can connect us to the global supply chain, and for that to happen, not just from GCC country, I think we should explore the entire world. Obviously. And do road shows overseas, tell them how important this investment in Pakistan is, and as a national slogan we should work on investment in Pakistan, or invest in Pakistan. And when I say national slogan, it means that not just the government speaking about it. I think even in academia, the bureaucracy, the technocrats and everyone across board should be speaking about invest in Pakistan, like we've been speaking about historically on made in Pakistan and other slogans. And it should not be a mere slogan. We should just reach out to, and for that I think what we lack is our intelligence ability. And when I say intelligence, the economic intelligence.
Obviously.
Of it. Where are the investors, and what sectors are the investors looking at? As compared to, and it's not just that you have that natural endowment in agriculture and mining. You should also focus that how investors are now viewing, and as Dr. Usman highlighted, I think the movement of capital post-COVID scenario, and also because of the geopolitical concerns that are there, and that those are brewing between US and China.
So do you not think that bringing and facilitating foreign investors from abroad, from different countries is a bit a hard task when your local investors are not interested to invest?
I think there are three tiers to it. One is the creating that enabling environment, which we spoke earlier, through our regulations, through hand-holding, creating that pull factor for them to come in.
Yes.
And then also the incentives that we offer within that framework, I think they should be carefully crafted. They should be, instead of front-loaded, they should be back-loaded.
Okay.
They should be non-discriminatory. I mean, you should not just give those incentives to certain sectors, industry or investors. You should keep it across board. Maybe keep a benchmark like it was kept in the policy for minimum $500 million, and removing the minimum equity that investor can invest in Pakistan. But more importantly, and I'll go to the home investors later, but beyond that, I think the basic sense of investment is that they should be able to create an environment where they can make profit, and that profit that they make, they should be able to repatriate to their respective countries. And I think that part is still missing. I think State Bank has to do a lot of work on that because of our currency crunch and sometimes other issues, regulatory again.
Because repatriation of the currency is already embedded there into the investment policy,
you
are talking about the regulations within the state.
I'm talking about you can have as many as regulations you want and act you want, as long as you do not implement and create that synergy.
Implementation is necessary.
Is important.
Definitely.
And now coming to the local investors. I think for local investors, we have the Ministry of Commerce, we have the Commerce and Trade framework available. But I think, especially for SMEs, we need to be more pragmatic. I think we have, so to say, SME policy available, but I think that policy advocacy and actually sharing that information with SMEs are missing. So what SMEs are doing is that they are just importing goods, services and work, and then just adding a bit of value and using it within local markets. So I think for this, and again, you know, I've always been promoting the fact that instead of having too many inspections and NOCs, why can't we use technology for create, I mean, if we want to check labor laws, if we want to implement labor laws and also other policies and regulation, we can always use technology.
Obviously.
And perhaps the inspection regime has to reduce. We should not intimidate local investors, because if local investors are intimidated, I think foreign investors will find it more challenging.
Obviously, that's the prime reason. Dr. Usman, when we are talking about to build economy on the basis of foreign investments particularly, so how do you see the economic diplomacy and engagement with the other capitals through your diplomatic missions to bring this foreign investment which is direly needed to Pakistan really?
Thank you very much for this question. I agree with all of the comments made by my dear colleague Dr. Hssan. And insofar as our missions are concerned, our consulates abroad, we have commercial consulates in many missions, but they struggle with being able to promote what Pakistan produces, fundamentally because it doesn't produce much of interest to those markets. That means to say that in terms of, and I mean that empirically, in terms of economic complexity, Pakistan is a very low complexity, especially for a country of its size, because if you look at our export base, it is limited to very specific tiers of either primary commodities or secondary manufacturing for household non-durables, which is your towels, your apparel, and things like that. There is only so many towels that you will buy in a year, for example. How could our missions promote something that we don't produce? So that's the first limitation. One great eminent ambassador of Pakistan once said that no ambassador is larger than his country. And the same applies for economic diplomacy, where, yes, you have very capable diplomats working on many different fronts. But insofar as even Commerce Ministry officials going abroad, DMG officials going abroad, they don't necessarily have that expertise as commercial counselors in those areas. So they just use those postings. They're not seasoned career diplomats necessarily. And even if they were, they wouldn't have much to show. So economic diplomacy, you see a better mechanism for this in some countries where they merge foreign affairs and trade. Department of Foreign Affairs and Trade, for example, because there's so much synergy. So New Zealand does that, for example, or Australia or other countries where they merge it so deeply that trade and diplomacy go hand in hand throughout the processes from the top of government. If we were to do that, you would already see an improvement on the bureaucracy side, because you have, mashallah, always had a very capable foreign office, and even in other ministries you do have capable people, but
So
you
do
have
you
so
think
many.
that do you think that with Mr. Ishaq Dar as a foreign minister, there would be any impact within the foreign ministry?
That depends on what your perception is of his economic expertise. So that's not something that I'm particularly ready to comment on, because I would like somebody to have control over and preside over ministries where we have at least 4 that work on things that are in the same ambit: planning, finance, commerce, as well as a board of investment and trade. Why do you have so many things looking at the same area of promoting in the exports? You would rather have the private sector consortia working on finding this. And you know what? I'm not a person who blames government for everything.
By the way, yesterday Prime Minister Shehbaz Sharif has categorically said, when he was addressing to the cabinet meeting, and he said that there are lots of institutes and organizations and ministries which we don't need actually. So this is very important really. You are absolutely right. So Dr. Hssan, when we are talking about some of the states who are sponsoring terrorism, and they are deliberately actually working against Pakistan to undermine its economy. From the last many years, we have seen Financial Action Task Force episode and all others. So how do you see that factor as a hurdle in bringing investments to Pakistan?
Yeah, before I speak on this, I would like to highlight one important thing, and this is on what Prime Minister said yesterday. I think I would echo what Prime Minister said, but on that similar account, I would like to highlight that while you establish new organizations like SIFC, I think you should eliminate or at least make them dysfunctional, all those organizations which were responsible for creating of SIFC. So any organization that you find is not part of the overall synergetic environment that we need in our country, it should not even exist. And that manpower should be shifted to organizations which are working, and then accountability should happen that way.
Definitely.
So now coming on the you know, the geopolitical aspect of trade and also some of the challenges that we have around that, I think we should not expect our not so friendly countries to create opportunities for us. They would always create challenges for us. They would, and not just on the diplomatic front, but also on the security front also. And I think Pakistan can address those challenges. And again, I would say that this can happen through use of technology. And I think again, the whole of government approach. We should identify those areas and those sectors and also those institutions and buildings and perhaps the special.
So if you just briefly tell us, Dr. Hssan, about how foreign direct investment actually boosts Pakistan's export, can boost Pakistan exports through by integrating domestic industries with the global value chain.
You see, again, you know, for creating an enabling secure environment for physical security and also for financial security, the model of SCZ works for Pakistan. If you have an SCZ and you have that secure environment where you're creating that ease of doing business, less people involved, digitally connected with the rest of the nodes and tiers, I think Pakistan can address many of its challenges which are lacking, and therefore some or the other, while our not so friendly countries are making sure that these SCZs are not there and a good enabling trade environment is there, we are ourselves also not working in the right direction in creating those SCZs. I think those SCZs should be established yesterday, not even tomorrow. And based on that, I think we can look at industries which should be there. We can have tailor-made SCZs and agri-based zones, and then from there we can work on. I think any regulatory framework, even FATF from on a global level, I think when you, and even IMF for that matter, when you work on bringing trade, economy and addressing poverty related issues, and I believe that poverty and security are interrelated. There is a great relationship between, even climate change, which Dr. Usman highlighted. These are all related, and
definitely all are related. Dr. Hssan, Daud, thank you very much for your presence in the studios. I'm really so sorry because we have run short of time, but it was very candid discussion. Really, thank you very much. You elaborated well. So nice of you, Dr. Usman. When we are talking about the foreign investments, unfortunately, Pakistan is posting only 13.6% to the GDP when we are talking about investments, as compared to the regional average of 34%, because in South Asia, Pakistan is the lowest. So what's the reason behind why we are lagging?
It's a very good point. You have some very high investment ratios in Asia as a whole. So Bangladesh would be above 20%. China is at 40% because of peculiarities of their economy. So it's probably not a reasonable benchmark to look at Asia. Asia is quite particular. But if you look at the world standards, Pakistan's investment rate is too low for a emerging market. And what that implies is that Pakistanis don't think about tomorrow. Right, because investment means you withhold current consumption to have something for future consumption. That's what investment is. So what you really need is to push the investment rate higher. Now, the points that have been raised earlier by my dear colleague, by you and by myself, all point towards having a more sustainable and continuity of policy in order to drive investment over a larger horizon. It means that our leadership needs to start thinking about horizons that are much longer than their tenures. The typical tenure would be 5 years, and instead you have to think of 30 years and 50 years. So intergenerational thinking and having the policy frameworks that you expect Pakistan to be at this juncture and that juncture over much larger horizons will drive investment rates. And
so if you just briefly tell us that this 22% of the policy rate, it is also a hurdle for the foreign investors to invest in Pakistan, because they are in a dwindling situation, that how they are going to have some sort of capital investment and capital availability as well.
You're absolutely right. That is a very good point. So if your base rate, your discount rate is 22%, then you have to earn at least 30% return on investment to earn in excess of inflation and interest rate and a risk premium. You have all of these tiers of risks to overcome and then have a return in order to have a viable prospect. But how many businesses can you count that can produce a 30% return continuously? It is very unusual. It's usually because of a monopoly or a market distortion. But in normal markets, which have many participants, it is very difficult to earn 30%. And that's why you have to have a lower discount rate to promote investment in business rather than parking the money in the banks, because you're getting 22% for free doing nothing. You might as well sit and do nothing at 22%. That's the distortion
Your
created
point
by.
well taken, Dr. Usman. Viewers, here we welcome our next guest, who is Hannan Hussain. He is the political analyst. Most welcome to you, Hannan, into the studios. Thank you very much for your precious time. So, how do you see, we are talking about investment. So, when we are talking that how Pakistan can replace the high debt ratio, have sustainable growth, healthy trade, as well as especially the exports must have to grow. Do you think that a sustained investment climate and investments in Pakistan would do all the trick?
I think it will. So, for example, when you talk about having a more predictable environment, that obviously depends on you having certain investors who've come in, who've tested the environment, who've brought in capital, who've seen returns, and then can testify to Pakistan's potential. You talked about increasing trade. I think there's huge capacity for Pakistan to, for example, understand how other countries at similar development stages have been able to navigate these constraints, add value addition to their trading goods, and also kind of bolster their own manufacturing base. I think for Pakistan, the main focus for me would be internal. So, for example, Pakistan has massive manufacturing capacity. We tend to subsidize them from time to time, but the idea should be to kind of make sure that their transition towards competitive goods is something that turns out to be a policy priority for the government, not just during a couple of years, but for a longer period.
It definitely must have to be sustained in future
Absolutely.
as well. So when we are talking about attracting private capital to create job opportunities for our youth, particularly to enhance our exports and value-added exports, because that is necessary. So do you think that it is happening right now?
I think not to the optimum potential. So I'd point you towards key countries. For example, much of the focus with, for example, Saudi Arabia. There's been an agreement to set up an institution that is specifically devoted towards tailoring Pakistan's labor force with the development and the economic needs of Saudi Arabia. Now, that's a model which you could replicate at home as well. You want your training institutions to be such that they align with industrial needs. At present, I think when you talk about attracting capital, investors' expectations are different. Market needs are different. And I think in order to kind of bridge that gap, it's very, very important for you to, for example, utilize the best out of your human capital. And the way you do that is you tend to train them based on what the investor and what the industrial sentiment is. I think a more generalized skill set based on specific sectors can at times backfire, and I think Pakistan can do much better than just that.
Yeah, your point well taken. Dr. Usman, earlier Dr. Hssan was talking about the special economic zones and special industrial zones must have to be set up. Those are very much necessary to attract the foreign direct investment into the country. So how do you see this scenario if Pakistan has the plans to set up these zones, but unfortunately very lazy work on that, or might be very slow?
You're correct on that, on your appraisal of the SEZs. You know, special economic zones apply a form of discrimination where you have the mainstream economy and then you have a special economy. So it discriminates between the mainstream and the special. It makes sense in a country where the mainstream economy has some serious distortions, such as China did in the Maoist era. So they created special zones where they would have different rules. Now, in Pakistan, I wouldn't want our normal economic activity to be disadvantaged as opposed to a special economic zone which would have privileges. I would actually like our mainstream economy to do very well, and therefore I'm not so keen on it. But if you do have special economic zones, they have to be the ones that have an indigenous demand, that they address special things in the market, or that they are very export driven. So they have to have special purposes in order to move forward.
Definitely, you are very right on that aspect. Hannan, when we are talking about investments, whether investments in specific areas would help achieve modernization of the industries, along with the value addition, what we have already talked about, increase productivity and competitiveness, the trade diversification, and helps export-led growth, because this is very important. Is it like that?
Yeah, to a large extent it is. So for example, when you talk about trade diversification, how have many countries done it? You need to expand the baskets of exports that you have, and you do that by getting greater market access and exploring niches. So I think when you move in that direction, I think it's important for Pakistan to, for example, see what the regional climate around its immediate market is. So for example, when you look at successful countries who've been trading, a lot of the focus is also on neighboring countries. So Pakistan does not exactly have the most favorable regional environment, certain factors out of its control. But I think when you talk about kind of diversifying trade and kind of setting up some degree of sustainability there, it's very important to kind of get touch of what kind of sentiment in the market is and what.
So do you think that foreign investments was also going to be very, in that sense, very beneficial for Pakistan, in a sense, to transfer the technology along with the management expertise and having some sort of access to the global market as well? So do you think that it is like that?
Absolutely it is. I mean, you look at a country like Malaysia, does not do really, really well in semiconductors, but is extremely equipped to attract that investment. One of the rationales over there, which I think Pakistan can reciprocate on other levels, is that, they say, for example, when you bring in investments, when you try to set up a plant or anything, that will have a ripple effect. Create a labor force, incentivize them, employment-led growth. So I think for Pakistan, foreign capital will have that kind of an effect, but it's important to, for example, first incentivize your local investor. Because from the foreign point of view, you look at the local industrial landscape, you see how many are investing, how many are not. Over the past few years, I think Pakistan could have done much better to incentivize local investors. You have them on board, and then you have a starting point to impress foreign investors and say, hey, you come in, you set up the network, and then it'll have a ripple effect, because Pakistan's labor force participation is also underutilized, and it has a huge segment that it can kind of weigh in on.
Okay, yeah, but your point is very important, very important. Dr. Usman, as Hannan said, that no doubt that Pakistan's labor force, along with that, particularly the youth, they are unfortunately underutilized. Most of them are might be not properly skilled or educated. So we have more than 63% of the youth, and when we are talking about the foreign direct investment in the country, it is obvious to have that helps to grow, particularly the industrial base, having more growth and resultantly have different sort of jobs. So how do you see that engaging youth in the labor force and all others, even women and all that, so that we have a bunch of human resource and then develop it according to different industries? When the investment comes, they utilize their expertise into that.
I fully agree with you, Faisal Saab. The youth is our greatest asset. The youth has to be adapted to the modern demands, and the modern demands change considerably, decade after decade, year after year, to be honest. So if our youth is well poised for the international arena, that means that we would have a significant advantage. Even without industrial manufacturing, you would already have the key resource required for the modern era. Our young people are extremely capable, and even in adverse economic conditions, they are creating opportunities for themselves, such as in the freelancing industry. But what you really need now is to channel that and galvanize that at a large scale, because this asset can find its own way, it is true, but it is much more helpful to have them channeled towards significant advancement in the development of their human capital, targeted towards the main areas that are required. The Gulf was mentioned, but I also think that IT and remote working and other things means that you can also be based in Pakistan and develop significant economic gains for the young people, so that they have good incomes and they are competing. There's plenty of possibilities on that front, but let us never discount the importance of the youth and give them the space and give them the capital to drive the next generation of Pakistan's economic prospects.
Obviously, you are absolutely right on that account. Hannan, when we are talking about investing in youth, as Pakistan will have estimated to 80 million of the population by 2030, and approximately, according to the estimates, 100 million youth chunk would be there, and those would be the potential investors in future if they are properly trained, well skilled, well academically very sound, and much educated, and most of them out of the entrepreneurship. So how do you see that? Why not to have the public sector jobs or private sector job? Why not to businesses? Why not the entrepreneurship? Why not to startups?
Absolutely, and I think you don't need to look so far. So when you look beyond the border, you look to China. Now, small, medium, and large-scale enterprises kind of form the crux. Small and medium-sized enterprises are the backbone for government focus. And I think it's one thing to create employment opportunities to get these guys on, and it's quite another to create an ecosystem. For example, when you have these small and medium-sized enterprises, they should be organic in nature. For example, having an entrepreneurial mindset is something that needs to be cultivated more deeply. So the youth knows that their transition towards self-starting businesses and government incentives is far more certain. Now, right now, it's more about engaging the youth in areas that the government basically feels that the focus should be on, when in many countries we do see that it's the youth that takes that starting point. So yes, you create that ecosystem, you allow these interchanges, and not only does it have a local dimension appeal to it, it has an international appeal to it as well. And I think with that kind of chunk coming along, even if in the starting phases you get 1/4 of that, that 100 million on board,
Obviously.
it's obviously going to create the momentum that Pakistan needs to kind of focus its growth and get those gains in.
So how much it is important and vital for Pakistan to have domestic businesses and investments, whether public or private, or large, medium or small startups. We have to create an encouraging environment. Do you think that it is important if you have an enabling environment of investment and local investments are there and youth are flourishing? So might be that would be the case for Pakistan to have foreign direct investments into the country?
Yes, it will, because many of the dynamics that you pointed towards are what the investors look for. Is there an existing ecosystem where investments coming in can guarantee returns, can guarantee security, can guarantee long-term engagement? So many times you might have one-off projects which seem really, really big, but does not give the momentum that is needed to kind of spur that organic employment sort of a thing. So I think when you talk about that kind of a stuff, it's something that's promising. It'll take a lot of I'd say policy continuity going forward. And when you talk about investment coming in from your local investors, I think another point that I would look at very, very deeply is the success with which Pakistan negotiates its external debt and the way we restructure it. Because as of now, every single Pakistani is subject to over 321,000 in debt. That's rupees. So when you have that on your shoulders, it kind of puts more distance between doing work today and getting gains tomorrow. So I think when you get those hurdles across, these dynamics come in, it's quite an ecosystem to look forward to.
Thank you very much, Hussain, for being here in the studios, for having a very candid discussion and well elaborated. Thank you very much. Dr. Usman Chohan, thank you very much for joining us online, because very elaboratively you have talked about how Pakistan can bring investments into the country and into different sectors. Thank you very much for your presence online. Viewers, as you have listened to our panelists, and it is loud and clear that most of the panelists were of the view that economists must have to deal the economy. And this is very important, because right now Pakistan is under stress and going through a very difficult time, and at this time we have to take very important, very correct and those decisions which must have to be a far-reaching impact. And those intelligent decisions obviously will take Pakistan towards new heights and development. We have to encourage small and medium enterprises and invest in those areas so that they can cater youth and encourage youth to engage themselves into the businesses, and having domestic investments to bring new entrepreneurship through our vibrant youth. Along with that, some of the panelists also suggested that Ministry of Foreign Affairs must have to be like Ministry of Foreign Affairs and Trade and Investment, so that that brings the investments, enhance the trade, and also have the foreign policy framework in their mind. Along with that, the implementation of different policies and regulations, that is very important. For that matter, Special Investment Facilitation Council is there, that must have to act robustly to go through the different arenas. Now, overlapping of the policies and regulations and some of the ministries and institutes is also an issue, so which obviously very well highlighted by the Prime Minister of Pakistan, Shehbaz Sharif, as well in the last cabinet meeting. So we hope that start is absolutely correct and there would be a success to have a better economy with the robust foreign direct investments and also the domestic investments into the economy as well. This is all from today's Foresight. It's time to sign off. Allah Hafiz.